Hello everyone, let me introduce myself. My name is Regina Putri RAMADHANI, a student at Technocrat University of Indonesia. Financial institutions are essential in the modern economy because of their function as mediators between groups of people with excess funds and those in need of funds. Financial institutions can serve many people in various ways. In financial institutions, we can find a variety of product and service offerings for individuals and businesses. The specific services offered also vary greatly between the various types of financial institutions that exist. Of course, the most well-known financial institution is the bank, which is the first group of financial institutions to accept deposits, offer checking account services, make business, personal, and mortgage loans. In addition, banks offer basic financial products, such as certificates of deposit, CDs, and savings accounts for individuals and small businesses. Banks are where many people do their banking activities. Meanwhile, among other non-bank financial institutions, one of the most well-known institutions is an insurance company. Insurance is also available for individuals and corporations. Insurance itself is one of the oldest financial services in Indonesia. Financial institutions have various functions that are closely related to the daily lives of the community. Their presence has a positive impact on people's lives, making them more qualified. However, the functions of financial institutions themselves are quite different, depending on the type of institution. Even so, here are some general functions of financial institutions. Both banking and non-bank financial institutions. Providing a guarantee of money storage security. Financial institutions that are established under Indonesian law, of course all their activities will be supervised and their business activities must be in accordance with existing regulations. One of the rules is to provide moral and legal guarantees to customers so that they feel safe and confident that the funds they have are stored intact. Then it will be returned when the due date arrives, for example for deposit savings. 2. Providing information to customers. People who use the services of financial institutions are required to obtain complete information about the financial products they use. Through financial institutions, customers can receive the information that has been provided and the clearest knowledge for their interests. For example, when a customer wants to take a mortgage product, the bank is required to provide information about the mortgage product from A to Z, so that customers understand how the mortgage system applies there and can follow it properly. 3. Facilitating the exchange of products that use credit and cash. Financial institutions also function to facilitate product exchange services that include goods and services using a credit or cash system. For example, customers who want to own a house can make payments through a mortgage through a bank. 4. As a transaction tool for all activities. Financial institutions also function to provide transaction tools that can be used anywhere for various purposes. For example, such as interbank transfers, daily bill payments, to payments for shopping. 5. Providing financing for business and consumer needs. In this case, financial institutions function to collect community funds and then circulate them again, through loan products available for financing according to customer needs. Bank financial institutions. A depository financial institution is a financial institution that provides banking facilities and services to the public, both in storage, payment, and provision of funds. Simply put, a bank financial institution is a financial intermediary institution established with the authority to accept and collect deposits, lend money, and issue banknotes. 2. Non-bank financial institutions. A non-depository financial institution or non-bank financial institution, LKBB, is a financial institution that carries out the process of collecting funds by issuing securities. In addition, non-bank institutions also provide various financial services and attract funds from the public through deposits or indirectly. Some examples of non-bank financial institutions include leasing companies, insurance companies, venture capital companies. Examples of bank financial institutions. 1. Central bank. The central bank is responsible for stabilizing the monetary system in a country. Each country has a central bank. In Indonesia, the central bank that is relied on is Bank Indonesia. Of course, Bank Indonesia must always ensure that the value of the rupiah currency is stable, so that it can also provide stability to the community's economy. 2. Commercial bank, general bank. Commercial banks are also known as general banks, namely business entities that provide banking services to the community conventionally or with a Sharia system. General banks provide financial services, such as savings, deposits, current accounts, mortgages, multipurpose loans, and others. 3. Rural Credit Bank, BPR. BPR is a bank that accepts deposits in the form of time deposits, provides loans and other financial services to people in remote areas. Therefore, BPRs are usually located in rural areas and other locations far from the center. Example of non-banks. Insurance companies. Insurance companies certainly provide protection services to their customers. In order to get this protection, customers are required to pay premiums according to the provisions. Customers can also get various kinds of protection, ranging from life protection, health protection, travel protection, and others. 2. Pawn shop. Pawn shop is a non-bank financial institution that provides credit with collateral. People can get loans on condition that they pledge their assets. Examples of assets that can be pledged are jewelry, electronic devices, motor vehicles, and others. 3. Capital market, stock exchange. The capital market is also one of the mainstay types of non-bank financial institutions. Through the capital market, customers can transact using securities, such as stocks, debt securities, or bonds, to mutual funds. From these transactions, customers can later reap abundant profits. To be able to enter it, customers must first register through securities or investment managers. 4. Savings and loan cooperatives. Cooperatives are non-bank financial institutions that provide savings and loan services to their members with relatively low interest rates, thus freeing people from loan sharks and being able to manage money more productively.